right, here on set, top financial journalist, my friend John Carney. John, welcome back as always. So I know we're supposed to be talking about tarifflation if we were Jerome Powell, but the reality is, this is what I want to talk to you about. I mentioned it to Scott Bessent in the interview. There's a lot of deflationary things going on. For example, commodities, all right, farming commodities, soybeans, corn, wheat, all that stuff is falling in price significantly. Maybe more important, energy prices are falling, gasoline prices are falling under $3. Now, tariffs are supposed to be inflationary. I think the Fed should be looking at some of these deflationary impulses and moving rates accordingly lower.
Absolutely. Yesterday, Walmart announced a big Thanksgiving package. You can buy it, feeds 10 people, $4 a person, cheapest it's ever been. So they've knocked down the price. It is deflation. We're seeing it not just, if you look at this, there's this thing called the Harvard Business School Tariff Tracker, and it tracks a whole bunch of prices. But one of the most interesting ones is the price of things that should be affected by tariffs but are domestically produced. The prices are falling. And if you look at just the last couple months of even the tariffed imported goods, prices aren't rising anymore. We're seeing today we got Atlanta Fed business expectations. Those haven't moved for 3 months. They've been flat, 2.3%. So there is deflation going on in the economy. The Fed should be paying attention, and they should be cutting.
Is this deflation partly because the Fed has been too tight?
Yes, I do think
Money has been tight.
It's partly because the Fed has been too tight. The other aspect is what you were just pointing out. Oil is falling in price. Gasoline is becoming cheaper. That makes the pass-through on so many items cheaper. We've talked about this before. The economy runs on oil. So it goes through so many different products, things that you don't even think about. Your food is priced on fertilizer, which is priced on oil. And so you have all of the energy
antihistamines,
right?
Glasses, tennis rackets, golf bags. I know, I have a whole list.
Everything goes through oil. So when you have oil prices falling, as you said, that's bad for Russia. It's good for our position internationally. Our friends in Saudi Arabia are actually helping us out on this. And we are getting cheaper oil and that is bringing down prices. And just mechanically, it's a big part of the CPI. So it will bring down.
It can be huge.
Yeah, even without all the other.
You may not see it in this number that comes out Friday, but you will see it in subsequent numbers if the thing holds. Now, let me ask you another thing that I didn't, actually, Scott Bessent did raise that because he's still running the IRS. Withholding tables are going to be changed to reflect the tax bill, the one big beautiful bill, and in particular the tax-free tips and the tax-free overtime and some other matters. Very, very important. Now, the Committee to Unleash Prosperity's newsletter is saying, I'll call it $200 billion, $200 billion of additional liquidity stimulus or tax savings, really for middle-class people. Now, that is a big deal. Couple of $100 billion at the beginning of next year. It kicks in January of 2026.
It is, and it will be a big deal. It will help a lot of people. I wish they could make it kick in December or November, frankly, because then you could call it a Christmas bonus for everybody. That would be great. But look, it's going to come. It's going to hit the economy, and it will really help a lot of businesses that maybe right now be feeling a little squeezed. Look, we do have low job growth going on. People are starting to worry. When you start to get that withholding brought down, people will have a little extra money to spend. It will be like look, the Fed has been hesitant to cut. They should have cut 50 basis points last time. They should cut 50 this time. They're not going to, unfortunately. They'll probably cut 25. But that tax cut will act very much like a Fed rate cut. It will provide extra spending power to consumers.
Just imagine if we didn't do one big beautiful bill, how screwed up this story. If you had a second or a third reconciliation. Look, the government is shut down. I was talking to Ari Fleischer about this. At the moment, there's no way around that. We may be shut down for weeks and weeks. This would have thwarted the entire tax cut policy. The business expensing wouldn't have gone through. These tax cuts for individuals and families would never have gone through. Just a man. Shutdown politics, I think, proves the wisdom of one big beautiful bill.
Remember, Larry, they were talking back in the spring about, oh, well, we'll get to the tax cuts back in September.
Right. Didn't
you?
And
then they shut down the government.
Don't you just love that?
It would never have worked out.
Right? You can't even get a continuing resolution through.
Don't wait. get it done while the, strike while the iron's hot is the cliche. They did it, they struck. That's going to rescue the economy. If we didn't get that, we would be looking at these massive tax increases that are coming through.
Of course.
That would have tanked the economy.
So one other thing, this is in the Scott Best interview, I asked Scott about gold and the Chinese buying gold and the BRIC countries helping the China, but the China, selling treasury bonds and buying gold. He didn't really want to get into that very much. I asked him if he was happy with the value of the dollar. And he made an interesting point, though. He said the dollar, which had bottomed July 4th when the tax bill was signed, the tax cut bill was signed, and has appreciated since then. Do you think there's going to be a stronger dollar because of the tax cuts and the economic growth? Is that a fair assessment?
Yes, I do think when people start to see the economic growth coming through, you will get strengthening of the dollar. We've been growing fast, but people don't believe it. We had 3.8. We're looking at above 3% for the third quarter. We're probably going to keep growing. There's some signs that growth is actually accelerating from 3.8%. That means we could be growing in real terms at 4%. That's a lot of growth. We get that tax cut coming in the first quarter, a couple Fed hikes. We could be looking at serious growth. That will feed people wanting to invest in the U.S., that will strengthen the dollar.
Yeah, we used to talk about this in the 90s. The global race for capital will be won by the dollar because we have the right tax incentives. It pays to invest here.
And we're doing that now. Look at what's happening in our stock market. It has done very well. The stock market understands that growth is here and it's coming. The thing that amazes me is when you listen to economists, they really don't believe the growth we've had. They keep saying, oh, it's about to fall off the cliff. I have news for everybody. It's not about to fall off the cliff. Growth is going well. Look, there are many things that could push it in the wrong direction. But fortunately, as you said, we got the tax cut bill. That's very helpful. And we're going to get the rate cuts. Look, Jerome Powell's only there till May. So we are going to get even better monetary policy once Jerome Powell hits the road.
That's bullish for the dollar right there. John Carney, as always, thank you ever so much. We appreciate it.